All right, we have arrived at the last session of the day before the demo hall, which I'm personally very excited about. So we have about 45 minutes or so to just answer your questions directly. So we're gonna have Jack, Amrita, Owen, and Nick come back on the stage. I'll do my best to moderate from up here. We have a few mic runners running at different parts of the auditorium. And so if you have a question, just raise your hand and we'll try and get to you. Start with Brian and then Tim, first two hands I saw. Oh, sorry, go ahead, Jason, yeah.
First of all, thank you very much for a tremendous presentation. Really appreciate all the detail. And what I really wanted to ask big picture is just as we look at the guidance that you've laid out for 2026, as well as the subsequent couple of years, what do you see as just the biggest risks to these financial targets, putting the macro aside, and maybe as part of that, if you can talk about some of the embedded assumptions just around loan loss rates and any additional color on commerce enablement versus financial solutions versus Bitcoin in terms of the gross profit buildup. Thank you.
I can start on this. The way we build our forecasts is we take the known trend lines in our business in very real time and extrapolate them based on, obviously the history of data that we have across the multitude of products that we've got across our ecosystems. And we extrapolate them for the months and quarters ahead. We then overlay that with a portfolio of new initiatives, many of which we shared today, that we expect to launch in the weeks and months ahead. And when we probability weight that portfolio of initiatives as to when we expect that they would be released and how they would compound to growth in the future. And so that really is the exercise that underpins what we shared today. Specifically from a 2026 perspective, more of that growth, more of that weighting obviously is coming from the initiatives that we've already got in our portfolio and that we've been recently launching. Products, like our Cash App Borrow product, Afterpay's integration with Cash App Card, in particular the post-purchase integration, which we've already scaled and will continue to scale, but also more nascent product launches in the future, like pre-purchase. And then with Square, what you'll see is the compounding growth of product innovation as well as go-to-market. Some of the exit rates that Nick talked about continuing into the future will be, of course, incredibly guided by our marginal returns as to how we invest in that and how we expect those investments to deliver growth into the future. From an execution standpoint, a lot of it, of course, comes down to execution. From a risk standpoint, a lot of it, of course, comes down to our ability to execute, whether it's measuring returns on a weekly and monthly basis so that we ensure that our investments are appropriately calibrated to growth, or it's measuring loss rates, for instance, on our financial services products or lending products to ensure that we've got the right inputs around our expansion efforts there. But what we see today, we're incredibly excited about what we think we can deliver in 26 and beyond.
Hey, Brian Bergen from TD Cowen. Thanks for all the detail. Nice job here. I wanted to dig in on the margin, maybe talk about the confidence in that margin outlook over the 3-year period, and particularly some of the key sources for you. Curious, as you guys are also going full on with Goose and Builderbot G2, how you think about what that means for you for needed workforce intensity in the company as well.
Sure. There's a full gamut of costs that we can explain, and I think it's different movers across our different cost categories. From a personnel standpoint, I think you've already seen us over the past few years get far more efficient. As we look ahead, functionalizing our company, working against a consolidated block roadmap together, being able to move people into squads so that they're working on the most high priority initiatives. I think that gives us a tremendous amount of urgency and speed, but it also gives us efficiency in how we deploy our resources to deliver impact and the returns on our teams. I think we are still in the very, very early days of that. I think the second piece from a personnel standpoint is automation. We can enable our current employee base to deliver more and more, to see higher returns from our existing employee base, and to ramp in the mid-teens from a gross profit growth perspective without meaningful personnel investments above and beyond how we enable our team from an automation perspective. There's a number of other non-personnel cost categories, from variable costs with sales and marketing and risk loss. These are big categories where we want to continue to refine and get more and more efficient, but are mindful of investing there where we see strong returns to drive growth. And then there's a number of other non-personnel fixed categories, which are, real estate, T&E, software and cloud fees, professional, consultant fees. It's a big body of spend. And we are going to be fairly rigorous in how we scrutinize that spend to ensure that we can put more of our dollars in the categories that actually return for our customers.
We do intend to go all in on automating through Goose and all the tools that we build on top of it. And I would expect to be able to prove a lot more of that next year. But the number one priority for our company is to automate our company. Because if we can do that, we can do that for our sellers, we can do that for all of our customers. And we've already seen by investing in that, we get entirely new product categories such as MoneyBot and ManagerBot and everything around BuilderBot as well. That acceleration will lead to things we're not talking about right now in terms of features and products as well. It just allows us to experiment much faster, build much faster, and get to product market fit much faster.
We'll go to Tim next, and then there's a question over here also.
Thank you. All right, great. This question is more for Nick, I think. But you talked about 300 salespeople in seat by the end of 2027, I think it was. And it was, you've given a lot of tools for them. So whether it's neighborhoods, the AI tools, you mentioned a stat today around 50% of the leads coming in are coming from the partners. So it's kind of supercharging these salespeople. So with that as a backdrop, I was hoping you could talk about the Salesforce productivity, meaning for these 300 people, what should we be expecting in terms of their contribution, whether it's to the acceleration over the next few years or it's a per salesperson, or maybe if you can't go to that level, maybe just how does that productivity expectation compare to maybe the competitor salespeople?
Yeah, so my anticipation is that this field sales motion should be able to get to the same size of our existing telesales motion over the course of the next 3 years. Like that's the scale of the opportunity. If we want to get to 50-50, field is going to be the primary driver of our ability to step change the sales-led cohort, and we're already seeing very clear line of sight. We are working really closely with our development teams on how do we better automate the sales motion. I would still estimate that about 50% of a rep's time right now is spent on admin and not spent selling. So we have a huge amount of room to give time back to our reps to make them more productive and to be able to drive more NVA per rep while we scale the count of reps. From the field motion specifically, we are really early, and the ROIs that we put up on the screen are reasonably primitive in a sense of like how we're steering our reps on where to go, when to go. So for example, we don't presently have best routing path of a day for a rep of where they should go and when. The reps are walking their local neighborhoods and we know their lists, and yes, the TAM's reasonably underpenetrated now, so that works. But there's a way to make them significantly more efficient than what they are doing right now. Or our present Salesforce way of working is designed for someone sitting at their desk. It's not designed for someone on the move. So how do we think about bringing that in where, if you walk into a store and you're trying to sell, you need to find the right moment that's at the right time when the person behind the counter has the space to listen to you or wants to commit to finding the space to listen to you. There's a lot more science that can be brought into how we show up in the field, and our processes to date and our technology to date are not optimized for our field team, but we're really focused on making them optimized. So the baseline of ROI in my mind is kind of like the starting point that gives us confidence, but I think we have a lot more room in finding efficiency of our reps and giving them better technology to help them automate and scale.
And just one thing to add, from a development perspective, we have dedicated teams that are partnering with some of the teams at Block that are a bit more operational in nature. So we have a dedicated development team that's working with sales and account management. Similar thing for customer operations, similar thing for risk operations and compliance operations. And so there's folks across engineering, design, and product whose entire job is to look at that workflow for, say, field sales or say for account management and say, how am I going to automate that? How am I going to get that 50% number down to 30%, 20%, 10%? And really excited about the progress we've made in the past few months.
Thank you. Adam next. I'll go to Darren.
Hi, Harshita Rao with Bernstein. So 2 questions. First, on Cash App monthly actives. As we look out into the coming years, Amrita, you kind of guided to low single-digit growth. But my question is, given all the paybacks you're seeing, we talked about that today, the product velocity, all the network and neighborhood initiatives, why not aim for a higher number than the low single-digit growth? Fully recognizing that that number hasn't grown in the last couple of quarters, so this is an improvement, and you may be kind of working off of the recent trend line. And then a follow-up, Amrita, just on the guidance. The 17% gross profit growth guidance for next year, the 15%, 27, 28, how should we think about that number, including the variable cost, all of them, including risk losses? Thank you.
Sure. I'll take the actives question. Appreciate the question. I guess one thing I just want to draw a distinction between is there's guidance and then there's setting a goal. So you can bet that our personal goal and what the team is aimed at delivering will mean, we're trying to meaningfully outperform anything that we put out there from a guidance perspective. And I'm really, really happy with the progress that we've made. Basically, this spring, we kind of said publicly that we're making network expansion the #1 priority for Cash App. We've shipped a ton of improvements over the past several months, and we're now starting to see that flow through. So I talked about this a bit at earnings, where we're seeing that year-over-year growth rate accelerate, obviously off of a low base and not a place that we're happy with, but we're seeing really positive trends. And I'm looking at numbers on a daily basis, on an hourly basis, and really happy with what I'm seeing. There's also other levers that are going to drive the business, or we hope to drive the business, that aren't necessarily factored in. I talked about, in my speech, I talked about network enhancements, I talked about teens and families, I talked about multiplayer money. Obviously, neighborhoods is a huge potential tailwind, where you're talking about tens of thousands of points of sale and essentially making each of them an upsell into Cash App. There's entire new product lines that Brian Boats talked about, the credit score, for instance. There's areas we didn't touch on today related to stable coins, related to cash for business. So I wouldn't read that as much as like a goal. I would read that more as guidance, and I think we're working every single day to outperform.
And I'd also say on the actives front that, as I'm sure you see in your own model, Cash App gross profit is levered pretty strongly to actives growth. So if we can outperform that actives growth, we obviously have shown a track record of dramatically growing ARPU within Cash App. The amount of utility that customers are finding on a daily basis across the ecosystem, how money moves through all of those products, and the monetization rate on them has underpinned really dramatic growth from an ARPU perspective. And so to the extent that we can inflect the actives growth number, that materially shows up in gross profit. So I think what we've shown today is based on our most recent track record, the compounding results that we've seen over the past 6 months, but obviously there's a lot more to do there. And the second piece, which is variable profit, I think what you saw in the presentation is obviously margin expansion, not only in 26, but in the next 3 years. We also shared incremental profit margin expansion from 25 and into the next 3 years. We, as I said earlier, will tolerate risk loss growth on a dollar basis. And you'll see that show up in our P&L as we expand these lending products. But we're going to be incredibly watchful to ensure that the returns on that growth, the margin on originations continues to be within our target levels. And so our ability to respond to any changes there and to profitably grow the unit economics on the individual lending products themselves continues to deliver over time. So I'd expect to see, variable margins as well expanding in line with those broader rates.
All right, so we're going to go to Adam right here in the middle, if you want to raise your hand. Then we'll go to Darren right next to him. And I'll come up front for Hamish.
Thanks. Really nice job today presenting all this. I think you kind of created a bit of a clearing event in increasing the aperture of the visibility into the income statement, getting a little bit more away from just gross profit growth and expanding into the adjusted operating income line. Is the right way to look at this, given the headwinds, Nick, that you described a little bit on the Square side, more Salesforce driven, higher merchants, which is a little bit lower margin, but you're driving a lot more operating income growth. And it looks like on the Cash App side, maybe a little bit of the reverse. Gross profit is growing a little bit faster than the contribution to the adjusted income growth. Is that the right way to think about it? But the building blocks are there on both sides of the business to drive I keep saying EBITDA, adjusted operating income growth. And then Nick, if you could just talk about your Salesforce ads and where they're coming from and what you're looking for as you build this group. Thank you.
So on the first part of the question, if I understand it right, some of the incremental areas of growth. So for Square, it's maybe larger sellers, international markets, and then for Cash App, our lending products come at lower blended margins today than the core, payments and software business. I think that's right. What we're seeing though is as we orient increasingly to variable profit dollars generated, and we expect to grow that, with discipline over time, we can see an overall blended profile across the mix of our products continue to deliver margin expansion. And that's, accreting from a leverage standpoint as we, strictly manage the fixed cost base. I hope that answered your question.
Yeah, and then, I mean, we think about this as dollar variable profit growth. Like that's the way, ultimately, the more dollar variable profit growth we can drive or acceleration of that year-on-year growth curve, the more that flows through into operating income. So when I'm looking at our opportunity, yes, we're like managing to a margin profile outcome because we don't just want to drive GPV for GPV's sake, but there are also some realities of how network effect is unlocked in a B2B-led business where people do respect certain people in their neighborhood, certain sellers in their neighborhood. There are staples and icons of neighborhoods that really shift the perception. And then in partnership, you can actually demyth some of the realities of what people might think of with Square through someone that they already respect. So when we're running a campaign with Katz's Deli, or the founder of Bluestone Lane is on the front page of the F&B, trade magazine talking about our hardware, that is a way better campaign for us than us running our own marketing campaign. We're definitely not at the efficiency, we're not maxed out on our efficiency frontier of our marketing spend, in my mind. We want to keep pushing it as long as it's going to drive inbound lead volumes and quality inbound leads that go down to the bottom of funnel and translate to an actual closed win rate. But we have such a meaningful portion of our leads today come from our marketing spend, and as we keep pushing it, we're seeing that marginal profile prevail. So, there's how do we keep driving the channels that will drive leads while we scale our team? Because if you scale your team and you have no leads, the inefficiency will start to show up and start to prevail. Field reps don't need leads. They need territories where you're underpenetrated, where you know that if they run the right routes, you're going to achieve the right ROI outcomes with win rates. Telesales, some of our other teams, that's like enterprise, that's where we start to get more into kind of the lead routing piece. I do think international is a really interesting piece here. And I spoke about the different variable profit margin profiles of international versus the US business, but we're driving MVA growth of 70% at the moment. These are really big numbers. And I think we can keep pushing in that territory of growth rate if we play our cards right. So I'm really focused on field. I'm focused on starting to build the right upmarket motions. Some of our leadership from the early days of Afterpay is now leading those motions and starting to build that out on the Square side. And then there are some newer things like reseller, scaling field, and being really focused on international.
The other thing I would add, Adam, is we talk a lot about payments pricing up market, but there's also a software opportunity that's pretty meaningful. And as you move up market, you attach more software. The pricing and packaging work that we launched at Square Releases a month ago is also an opportunity to sell more software to our customers and help them run their businesses more effectively, which has a monetization benefit, of course. Darren next.
All right, thanks guys. It's Darren Beller. This is probably more for Owen and for Jack, but you know, for some years now, we've talked quite a bit about the connection of the ecosystems being a big aspiration of the company, Cash App and Square. And I'd love to hear more tangible examples of what you think is actually going well today, and more importantly, what you see as potentially showing milestones of success in a year from today or 2 years from today that have said you would look back and say, you really did succeed in connecting the ecosystems. To me, that's one of the biggest potential differentiators of Block going forward.
Yeah, I can start. I think the biggest proof point ultimately is going to be neighborhoods, because it's a real product that both our sellers and our Cash App customers will value. I do believe it'll drive significant usage for both of those ecosystems. We were not able to do that over the past few years for a number of reasons: technical, personality, like organizational and whatnot. So being able to see actual sellers and actual individuals use it on a increasingly regular basis, and what it can potentially unlock for them is massive. But that's just one part. Like everything that we talked about last week with Bitcoin also is referencing how we pull our ecosystems together and how they can actually play off one another to the positive. So I think, you know, over the next 6 months to a year, we'll have a lot of proof points that we're excited to show you all on why these two ecosystems can really scale together. And we're one of the few companies in the world that have both sides of the counter, and we intend to fully take advantage of that in every single way in order to get more customers in both of those ecosystems.
I can just add a few thoughts. I really wanted to lay out kind of how we think about our capabilities, and then our brands really just being interfaces on top of them at the start of my talk, because I think it gets to your question. So I think there's already a number of ways in which we are and we have been connecting our ecosystems that's not necessarily incredibly visible to customers. And this was part of the goal around functionalization. So right now we have like a singular AI stack built on top of Goose and that agent substrate, and that's powering MoneyBot and that's powering ManagerBot. It might not, you know, visibly feel to a customer like we're connecting the ecosystems, but it's letting us move faster. It's letting us build incredible things in a matter of weeks or a matter of months. Similarly, we now have a singular financial platform across the entirety of Block versus, you know, having one for Square, having one for Cash App, so on and so forth. So I think that we've made a lot of progress just in terms of our ability to move more quickly, our ability to get rid of duplication at the company. In terms of things that are going to really affect the customer experience and where you kind of get that combinatorial benefit that we've been talking about, I agree neighborhoods is probably like the biggest thing to watch in the immediate term. But really on the development side, what we're doing now as like one product development team is we're looking at every piece of Square, we're looking at every piece of Cash App, every piece of Afterpay, and we're saying, how can we provide differentiated value here? So there's a few other touch points that I would think about. One of them is obviously the integration of Cash App and Afterpay in the US. I think that's absolutely massive. So going back to the previous question, you know, we're working toward having that tailwind of Cash App actives in terms of US Afterpay actives coming into Cash App. I think similarly, we continue to focus on our payment stack with Cash App Card and Cash App Pay. So the more payments that we can get at Square sellers with Cash App Card and Cash App Pay, the better that we can make that experience, both for consumers and for merchants, if you think about things like rewards or if you think about things like processing costs or what have you. That's why I think dollars on Lightning or Bitcoin transactions on USD was such a massive announcement to talk about today. And then I touched on it a bit in my talk, but I think the employee network and the staff network is a pretty meaningful opportunity here. Increasingly, you're seeing us build more and more features and products into Cash App that are broadening the aperture of Cash App into like basically whatever's related to your financial life. You should be able to manage it within Cash App. And so we have millions of staff members who work at small businesses on the Square side. We also see a very large number of new staff members on an annual basis. And to the extent that we can make Cash App just the default banking platform to get paid instantly for work that you do in a given hour or a given day, that's going to be pretty massive. But I guess more broadly, I would say, basically, we're looking at every single capability, and then how can we expose that to a given customer through a given interface, and how can we add more value by leveraging capabilities across our brands?
Okay, so we're going to go to Hamish next, who's the very front row, and then Tingen after that.
Jack, maybe a question for you. One of the things you've hammered home is the importance of product velocity. And it feels like there's been a massive change there organisationally over the last couple of years. Where are you on that journey? Are you able to characterise that, and what more do you have to do to where you want to be?
Yeah, I think we've certainly done what we need to do from a structural standpoint. I think the rest of it comes down to mindset and more accountability and putting into practice. The tools we're using are very advanced, and we are ahead of the game in most of these things. Goose has not only been successful at our company, but other companies such as Stripe and Databricks. Like it's a model that actually works, and part of its power is that we're completely model independent. So it can be a front end to any model, whether it be open source or one of the bigger corporate frontier models. So it allows us a lot of flexibility in applying it to the work. So I would say that we have had significant velocity shifts over just the past 6 months, but every single month is going to get better and better and better as we get more of the team to use the tools, as we understand like where we can fill the gaps and like really apply this technology even more. But most of it's making sure that we get this mindset, my last slide, fully integrated into the culture. And that's going to be a big part of my entire focus, our leadership team's focus, and making sure that we have an organization that really lives up to those three things. That changes our velocity completely. So we made major strides. All the structural stuff is more or less done. Now it's just like putting it into practice again and again and seeing it compound.
Okay, Tingen up here, and then we'll go to Dan over here.
Thank you. Thanks, Matt. I guess I just want to share a couple reactions maybe to your session, Jack, if that's okay, and get your feedback on it. So from a mission standpoint, the mission's always been pretty consistent, right? Economic empowerment. I think you shifted that to include autonomous economic empowerment, if I heard that correctly. So that's one observation, big push towards autonomy. And then the second one, when you talked about inflections, my reaction was that in the past, most of these inflections were from established products, and then you bring those to the mass markets or to the underserved. But I think the one that you called out, I think it was what, data and then AI. I would say those are less established, right? So I'm curious how this inflection might be different as you're moving the mission more towards autonomy. Is the market ready for autonomous tools? Is it ready for Bitcoin? How are you thinking about that within the framework of past inflections that have worked very well for the company, if you follow my question? And I know in the past, Jack, you've talked about Horizon 1, 2, 3. I don't know if that thinking applies here or not. Sorry for the long-winded question.
No. My sense is that any company that doesn't build a platform for autonomy is going to become irrelevant, because the frontier labs will take more and more of those use cases. And our intention is to lead this effort and not to react to it. And I think you're right in terms, well, I would say that all those other three inflection points, those were not established products at all. Like, especially for the people that we served. all of them were, certainly looking at like these use cases and broadening the access, but they weren't established in our customer set. And establishing them in our customer set and then building on top of them so that we could go more upmarket is where we really won. We believe there's a massive opportunity which is differentiated and unique in this sense of having real-time living data fed into models that we create and we control, that other companies are trying to take from companies like ours and ingest them so they can build similar services, but we have all that today. So we think it's really important to focus on this concept of proactive intelligence, noting that most of the AI models today are trained on old, dead data from the internet. They don't have access to the fundamental data that we have every single second of every single day as people just use our product. And all these models are becoming more and more commodity, especially given all the open source models coming out of China. So it gives us a very unique vantage point and gives us an ability to actually level the playing field for our customers and for ourselves and move faster than we were able to in the past. So I do see it as an inflection point. I do see it as something that transforms our company, and we intend to lead on it, but words are meaningless. We're going to prove it. We're going to prove it to you. In terms of Bitcoin, again, like this represents a shift and an opportunity for us to reduce a singular dependency on the current financial system and networks and provide other options and provide our sellers the ability to really push their customers where they go so they don't have to pay fees. There's economic incentive to this. It's not just being about crypto. It's not just using cool technology. There's economic incentive and economic freedoms that this technology gives our seller customers and our individual customers. And this is just the beginning. It's not just about payments and transactions. There's a whole category of services that we can build on top of this open stack. But payments is obviously the most fundamental and the most important.
Just one quick add-on from a product perspective. I think we've done a good job on the Square side and Cash side of just obfuscating away from the complexity. And so you had a question about readiness. I think the question is like, I believe there's some customers who perhaps don't care that, let's say, MoneyBot is running on, let's say, GPT 5.1 versus Claude Sonnet 4.5 versus an open source model. What they care about is that they're able to save up a rainy day fund, or they're able to get good financial advice from MoneyBot. I think similarly, you don't necessarily have to believe that tens of millions of customers are going to actively choose to pay in Bitcoin tomorrow or next month. We can obfuscate a lot of this complexity. What they care about is that their transaction goes through for their coffee, and what sellers care about is the transaction goes through, and also maybe I'm paying less. So it's our job as a design and engineering-led company to obfuscate away a lot of the stuff that we're talking about here and just build incredibly simple experiences that customers love. And I think that's more so what we're getting at.
So I'll go to Dan over here, and then the question on the back bench back there.
Hey guys, really, really interesting analyst day. Thanks again. Maybe just a question on all the lending stuff. I mean, the one thing that I came away, by the way, Dan Dolev from Mizuho, sorry about that, is how good the lending is, right? Like the loss rates are very low. And I think a lot of people don't understand it. I think that's a big overhang on the stock. And so my question is basically like, would you consider maybe consistently providing more data, maybe even making it a separate segment that shows, okay, here's everything we do in lending and here's everything else, because the data speaks for itself and it looks really good. There's no reason to not put it out there. That just, maybe a question on me. Thank you.
Yeah, I mean, Matt, you should speak to this too, but I think a big part of what you're hearing from us today is a commitment to increased regular disclosure and transparency on these quickly ramping parts of our business, whether it's important parts of our business, whether it's on Square go-to-market or it's on Cash App lending or what have you. I think a big part of the reorientation of the revenue categories is to highlight the pieces that come from financial services. Now, there's more in there than just lending, but certainly lending is a key piece of that. Everything from, margins on our originations, our ROICs, like these are incredibly strong metrics that we're tracking on a daily, weekly basis. And so we do commit to sharing more of that on a regular basis.
Yeah, I'll just add, so there's a chart or slide in Amrita's presentation that showed originations by borrow and BNPL, showed variable profit, and it showed return on invested capital. Our plan is to share that information going forward. As Amrita said, we seek people's feedback on what we shared today, and so let us know what you all think. It's worth just pausing for a second. That was one of my favorite slides in the entire day. 50% origination growth, 28% return on invested capital, 2% variable profit margins that have been stable throughout the last several years. It's just, I think the team that managed our underwriting risk, Boats, who's up here, and everyone else with him, has done an absolutely exceptional job, and it's worth reflecting on the fact that that scale, that growth, those returns, just I do not think exist anywhere else.
Can I make a couple of points? I think lending is a super powerful block. I think when you actually look at gross profit profiles across like fintechs, others internationally that we believe are great businesses, it always comes back to lending. And access to liquidity is one of the most valuable things that you can give a human. And we're seeing that. And the reason why we are so uniquely placed that it is a superpower is because we didn't start our life lending someone $2,000 over a 24-month period and making a decision today that we have to live with for the next 24 months. We have such fast velocity of our book, short duration loans, small average order value, small ticket sizes, highly diversified. We're dealing with millions of consumers every single month. And that's like a very unique thing that we've designed that is fundamentally the opposite of the broader financial services ecosystem. So when you see that there's like pressure in the market on loss rates, and you see that we've been able to hold our loss profile while significantly scaling, the fact that risk loss is up on a dollar or like a year-on-year metric is an irrelevant point of view when you're growing borrow at 134% year-on-year, and the velocity is prevailing, and you're assessing each loan or each order every single time. So I think we have a job to do to keep reinforcing that our lending is different from everyone else's lending. And our lending is the most real-time lending that happens in the market because we're looking at it on such a short order basis with such high velocity. And that's why you're at over 100% return on equity as a result of the annualized returns that are, our margin profiles prevail. So I think this is the thing we have to keep leaning into and like hold it and be proud of it because it's a superpower for Block.
Yeah, and this DNA started all the way back with Square Capital, which is now called Square Loans. I think one of the most undervalued aspects of our business is the data and the understanding we have of our customers. And now that we have these tools, such as AI, we can do something even more magical that is cohesive with lending, but really allows us to tie so many use cases together with that understanding.
All right, so there's a question on the back row here.
Hello, hello. My name's Cameron McKenzie. I came actually down from Vancouver, Canada, because I'm so impressed with what Jack and Jim created many years ago, and all the incredible things you guys are doing and showing us today. You mentioned Cat's Deli, but Purdy's Chocolates is a chocolate company that I grew up with, and the local family in my town, Vancouver. Building for durability was something you mentioned earlier, and this focus on teens and capturing teens' financial literacy. I'm an investment advisor with RBC Dominion Securities, and we talk about financial literacy all the time. But the sticking of that is not what you are providing with teens. And the bigger picture of why I came down here was to learn about the blockchain and the Bitcoin. And it's a yes or no question, probably to Jack. But is Bitcoin awareness an obligation for Block?
No.
Thank you. Keep your head down and keep doing what you're doing then.
We love Purdy's Chocolates too. I think actually a question right next to you if you want to just pass the mic one person over.
Yeah, Sean Emery, Avery & Company. On the bot side, how do you think of if usage across the board ramps up and how that affects maybe margins, but then even more importantly, I think monetization of it? And then second, on the Cash App investing side, how breadth, depth do you want to go there? Some of the competitors are pretty deep at this point. It couldn't drive engagement over time. So that's kind of the second question.
Yeah. On the bot side first, we want to, for MoneyBot, we want to provide someone with something that is equivalent to having a personal CFO. And we think that's extremely valuable. And we think giving time back is extremely valuable. And we want to price it ultimately according to that. But we have a lot to prove before we get there, and we want to earn the trust that it's actually doing the right things for people and they find real value in it, and that is exactly what we're testing right now. On ManagerBot, it's the same thing, which is we believe that this should be equivalent to hiring a COO or a manager for your business, and that if it's truly automating your business in the same way that we intend to automate our business, that's extremely valuable and should be priced accordingly. We think there's an opportunity with BuilderBot as well for companies like ours, but also for smaller businesses that we've historically served over 16 years, and certainly upmarket. We don't have immediate plans on how to package and productize that, but we do think there's a lot of opportunity to do so, and we will be looking at it.
Just a couple of things to add. Just from a cost perspective, as we think about MoneyBot and ManagerBot ramping, feel pretty good about it, not too concerned. As Jack said, eventually you can kind of figure out the pricing just for those things. But then in terms of MoneyBot and how it actually flows through, I think it's actually a pretty incredible system from a product perspective, because we've spent the past decade on all of these like lifecycle models and personalization models and next best action models, et cetera. You've kind of had to hide that behind the other things. It either seems like it feels like a crummy push notification, or you're kind of like building that on a different UI. It truly is giving customers suggestions. And so then the way that I expect that to flow through, or how you could imagine it flow through, is just cross-sell, upsell, and engagement, new product adoption. We're already seeing instances of folks who are starting to use savings, starting to use investing, or what have you, from their conversations with MoneyBot. The other thing is, to the extent MoneyBot can really differentiate, it's a huge value prop for a given customer who uses Cash App maybe periodically to bring their entire financial life onto Cash App, because now you have this conversational CFO that you can chat to about everything that you do on the Cash App side. So I do think there's a lot of upside as well. It's not just on the cost side. For investing, just where we're focused right now is investing products that serve the vast majority of Americans. We don't have any immediate term plans to do, short selling or margin loans or what have you. Like the vast majority of Americans do not need those tools. And so we'll continue to invest. There's some interesting features we can build, but I wouldn't expect us to go 100% deep in the investing world in the immediate term.
Yeah, I'll just add in tying your connection back to our guidance, we don't include meaningful gross profit opportunities related to our AI initiatives in the guidance that we laid out today. We do include some modest costs. I think, as I mentioned in my presentation, about $130 million in 26 related not only to AI, but neighborhoods and Afterpay pre-purchase. So some newer initiatives that we'll be ramping next year, we've included investments against. But AI, maybe tying to Tianjin's question earlier, is more nascent. And I think business models will evolve. At the very least, you can imagine things like retention and cross-sell through some of these AI conversational proactive intelligence means, but potentially business models on top of that, and that's not what's factored in the guidance today. That's upside potential.
All right, so the back of the room's been really quiet, or maybe I've just been missing hands the whole time, but anyone in the back rows have any questions? Question over here.
Thank you. Ken Sahosky, Autonomous Research. I wanted to ask about monetization of Cash App. It feels like Cash App monetization has had different drivers and contributors over the years, right? Starting with instant transfer initially, then you moved on to Cash App Card. Active penetration has increased. You're driving growth with Cash App Borrow. When you think about the next leg of growth, are there one or two products outside of Borrow that you think can really help contribute to gross profit growth over the next few years? I think, Amrita, you said there were a number of product launches in the works, and then I also saw the think there was a reference to Cash App Score and potentially leveraging that data and selling that data. Thank you.
Yeah, I can talk about this from a product development perspective, and then let Amrita tie it together in terms of the plan. I think on the Cash App side, there's no shortage of new product lines that we can build. I think we're in a really, really unique place where we started with peer-to-peer, we've layered in a new financial service basically every year over the past decade, and we've had market fit and we have strong attach rates with all these products in a way that, frankly, some of the other competitors in the peer-to-peer space don't. And a lot of that is because where we started was serving those who were traditionally underserved by the financial system. And so the attach to Cash Card is really high, and the attach to Borrow is really high, and the attach to Bitcoin is really high, and so on and so forth. So the one way that you can think about it is just to redefine the world's relationship with money, you have to serve basically every transaction type. So what are some markets that Cash App is not playing in right now where customers are transacting? Those are the sorts of things that you could imagine us building, whether it's in 1 year, 3 year, 5 years. And there still are a number of categories where we aren't playing. I think that, more specifically, I think the credit score internally and also, potentially externally is an incredible example of what could be a new product line. There's other products that are out there in the fintech space that we could easily build ourselves or integrate with. And then I think more broadly, really the commerce side will continue to be a huge tailwind for us. I think Cash App Pay, we're really just getting started and we see tremendous demand. And then there's so much that we can do with Cash App Pay, with Dollar on Lightning, with how we think about building these payment networks. And so I think there's a number of potential multi-$100 million gross profit lines that are kind of coming down the pike.
Yeah, I think we have time for one more question. I can't see who it is back there, but yeah, perfect.
Hey, this is Jeff Campbell from Seaport Research. Thanks a lot. Nick, I thought your presentation was really good, and Owen, yours as well. Owen, you highlighted using Bitcoin for payments, and you called that a paradigm shift. Question I have is, how does Block plan to help do its part in facilitating the adoption, both on the merchant side, open up that aperture, but also with consumers? It just strikes me that you guys have a lot of experience with Bitcoin over the years, and you'd have ideas on driving consumer adoption, because as we all know here in the US, at times there could be a solution in search of a problem mentality with payments. I guess I'm just curious, what the plan is around driving adoption, or how you see that playing out over time. And then Jack, this probably is the most important question you'll ever get asked from the sell side. Are you Satoshi Nakamoto? Thanks.
All right, I'll kick it off. Nice two-parter there. So I think we're really good at driving customer behavior shifts. One fun thing that I like to do is think about when I started at Block 12 years ago, our readers were all swipe, and we were kind of in a tizzy about this whole EMV thing and like building the dip reader and so on and so forth. And then all of a sudden you get tap. And we did a really good job of kind of like moving customer behavior forward, both on the seller side and also on the buyer side. And now it's probably just like an afterthought that we were ever swiping cards for many of you. But that was really core to our business. And so there's a lot of learnings in there. I think one is keep it simple. So like we can obfuscate away a whole bunch of complexity. I don't think the average American is going to necessarily deeply understand or care that much about the Lightning Network and what the L2 means versus the L1, and they don't have to. We don't have to put that front and center for them. And then I think second is just build an incentive structure that works. That's why I'm so excited about what Brian was talking about with neighborhoods. I'm so excited about Cash App Green. We have a ton of leverage in the business, and so we can build incentive programs both on the acceptance side as well as on the buyer side in order to drive adoption of any given product or any given form of payment. And so that's what I would say. It's like if we keep it simple and we get the right incentive structure, then that will just compound positively over time. And it'll be a similar sort of thing where in X number of years, you'll look back and it's like, wow, can you believe that we were doing it this way when like this is clearly so much better for everyone involved? That's like by and large how I think about it.
I think the incentive structure is there. And I think the cost savings is obvious, and our merchants will lead the way. And it's just a matter of trying it a few times where you see that value. And I'm sure you all have had experiences where you're starting to see more and more cash-only signs. and I think that only increases over time. So this provides another alternative. On the Satoshi question, the most beautiful thing about Bitcoin is that question does not matter at all anymore. It's an open protocol taken over by a community that wants to see an alternative to an option. And if it was important to Satoshi, there's a simple way they can prove who they are. So we'll wait for that day. But just as a way to close this out, I really mean what I said in the beginning about giving us critical feedback. So we had a lot of questions today, but our emails are always open. If you email me, you can discover my email address. I'm not going to say it right now, but you can discover it. I read everything. I may not get back in a reasonable time frame or at all, but I take all the input, and it's really important that we get this critical feedback. If there's anything you don't understand about our business, if there's anything confusing, if there's something that you think is off strategy or just does not make sense and never has, then please send it our way, and we will consider it, and we will take it to heart, and we'll make sure that we improve it in any way that we can. The most important thing for us is that we're building something valuable for our customers. And we believe that we have something that is truly unique. We believe we have these capabilities that are very hard to build up and to maintain. And we believe that we are, again, in a leadership position from a technology and design standpoint. And that's what I want you to hold us accountable to. And if you see us straying from it, then speak up, be frank, be critical, and be brutal, because we're only going to get better because of that. So it goes for all of you in the room, but also all of you in retail watching from afar. Please share the feedback, and we'll only improve from it. So thank you. We have so much gratitude for you all, for your time, for your belief and your patience, and we're going to make good on all of it. Thank you.
Thank you.
Maybe one last thing. Jack probably doesn't want me to say this. He may or may not be Satoshi, but it is his birthday today. So what better way to celebrate with than with 200 of your closest friends? Hopefully you see him down in the demo hall. Please go down and check out all of our products that are down there, meet other employees, and sing Jack happy birthday.
Thank you.
Thank you all.
The session in the main auditorium has come to an end. Please make your way downstairs to the demo hall. Thank you.